This is Scott Becker with the Becker Private Equity Business Podcast. Today's topic is Apple closes in on $3 trillion, 3 quick points. So here's what's happening with Apple. Yesterday, the stock got to almost $3 trillion. It is up, as our first point, about 46% year to date. Second point is its revenues and profits aren't really growing. What's happening right now is the market itself is up, basically based on the concept that the Fed is close to taper off on its rate rises or rising its rates, although Powell recently said don't be shocked by a couple more interest rate hikes this year. But the market itself is way up. Apple's up 46%. There's a few of the big tech stocks that are up more than double this year. Meta Platforms, Tesla and NVIDIA have all doubled this year, more than doubled this year. But Apple's up 46%. The other thing that's driving its stock results is it's been very aggressive about stock buybacks, and that also helps keep the stock price up as it buys its stock back and leaves it less diluted. So essentially, stock's up 46%. The revenues and earnings aren't really growing. They beat estimates, but they're down from a year ago. So it's not really that. It's the stock market itself is up. And finally, Apple, as a third point, is trading at a price-to-earnings ratio of about 29, which historically is a really high number, particularly if the stock's not really growing or the profits aren't really growing. But again, Apple closing in on $3 trillion. A lot of that buoyed by the stock market just being really up this year. It's up 46% year to date. Its price-to-earnings ratios at a 29. It's using stock buybacks to help support the stock, but do be aware that the sales and profits aren't really rising, although they're doing a little bit better than estimates expected by analysts. Thank you for listening to the Becker Private Equity and Business Podcast.